Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Stock Movers Report. It's a podcast. It's important. And all the distractions today, guess what? Stocks move. Here's Lisa Mateo.
We got it. We have those credit card companies, banks sliding. The reason for all this, President Trump said credit card lenders are going to be, quote, in violation of law if they don't cap interest rates at 10% for 1 year. And he set a January 20th deadline for compliance. So we look at companies like American Express, ticker AXP. Their shares have been down about 4%. Capital One, COF, down about 8%. JPMorgan has been down as much as 2.5%. And you even look at Barclays, which has U.S. credit card business. They were down more than 4%. So credit card interest rates, they've been hovering about 20% in recent years. You have Mike Mayo. He's an analyst at Wells Fargo. He said in a note that new potential card cap could wipe out earnings from cards for a year. And the problem critics are saying is that they say a 10% interest rate cap, that would reduce credit availability. So less people would be able to get them. Well, and those are people who rely on these credit cards.
My question to Joe Matthew, I mean, he's the one that's, I don't know what I'm talking about, but on balance of power, is the president to the left of Senator Warren of Massachusetts on this? I mean, this is like wicked, way over in the political spectrum, I think. It
is, but both sides have been kind of complaining about this, the credit card
Well, we're all
rates.
complaining about it.
Correct.
What's the rate? I mean, Lisa, you have a preferred rate of 7%.
I wish.
Get me in on that.
But it's true. You know who would be the winner in all this is what they're saying is that Mike Mayo saying that it's going to be firms like Klarna, a firm like those pay now, buy now, pay later. Yeah,
really.
Those and banking trade groups are saying it could lead some Americans to pawn shops. Like they're saying this could be a big deal. I don't know if it would go that extreme, but.
Okay.
That's what they're saying.
Next.
I want to go to Sun Country Airlines. It's ticker SNCY. Their shares have been up as much as 16%. The reason for this, Allegiant Travel agreed to buy the company. It's a $1.5 billion cash and stock deal. Further, it's just driving consolidation, right? In the U.S. airline industry, there's a lot of competition. The combined airline, here are the details. So they're expected to operate about 195 aircraft, expand its service to 18 international destinations. Allegiant shareholders are going to keep 67% of the combined entity, and then Sun Country investors are going to hold 37% of the remaining stake. Allegiant's going to continue to be that publicly held parent. The combined entity operate under the Allegiant name. But
I wonder if they overlap like a lot of routes. You know what I mean? Like, what's this going to mean for the passengers?
Correct. And it says it's going to help them meet demand during the peak travel season. So they say it's going to be better because more people can get to where they want to go.
I think we're going to see more consolidation in this space this year. The airlines, you're so right. It's too crowded. And the margins are just too short. They're not going to be able to do it.
Why don't I know this airline? I mean, they're out of Minneapolis.
Sun Country.
That's what I was going to ask. Where are they out of? Minneapolis. Okay. Sun Country Airlines.
Okay. I was sitting up on our acclaimed food court, and the points guy sat down with me.
Oh, yeah. Oh, did he?
We talked about it. He says it just continues. People love the major airlines as they build miles. And that's the bottom line.
It's true, because I track mine continuously.
Do you use them? I find I can't use them.
I do. I use them when I need to fly somewhere. I use them all the time. I have to.
Use them or lose them. You know, Tom King?
Especially when you're traveling to these colleges to check them out. Yes, Shake Shack I'll go to. Yes. Falling about 5%. They reported a miss on preliminary revenue for the first quarter. They blamed inclement weather, like bad weather in the Northeast, for keeping, people away during the last 6 weeks of the year. But it just shows,
I don't know. Is that true?
I don't know. You can blame weather for anything, I guess, nowadays. But it's just,
people
fast
are eating
casual.
healthier. I just don't know if they're meeting the moment. Shake Shack,
And it's true, but you've seen it with like fast casual, like even healthy ones like Sweet Green, they were not doing well.
Right. Kava, right?
Yeah. Chipotle not doing well. So you look at that. I mean, actually Shake Shack did better than those two.
When you order Shake Shack, does Afterthought give you like 2 cheeseburgers just to be sure that we're not angry that we...
Oh, to make it better.
Yeah, to make it better.
To make you feel better about the purchase that you just made on your credit card.
Oh, look, I got you 2 cheeseburgers.
Thank you.
Shake Shack.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.